The RBA predicts housing will plunge by 15%. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Grab your stein of coffee because the RBA is predicting housing could plunge by 15%, everyone. Now, where have we heard these type of claims before? Well, we've discussed them on this channel a year ago, guys. And we can see here, RBA modeling, 40% house price falls. And remember, it was so article after article after article of property crashing, housing crashing, property falling. And, well, what happened? Let's have a look here. I'm going to bring up this, where is it? Hang on, I'll find it. There we go, property prices. And I won't edit that out to keep the authentic feel of the channel that I have here, or because I'm lazy. But, okay, this is back in 2019, and we can see there that property just shot right up. But now if we go asking prices, let's have a look here at all capital cities. And let me just refresh this. I have to click on my streaming software. And there you go, everyone. So that video we did a year ago, and we go, a year back. So there we go, yeah. What was that? That's all homes, $1 million. Now we're at 1.2. So let's say we lose 20%, which is 200 grand of $1 million. We're still back to a year ago. That's more than they're predicting here. And they predicted 40%, which didn't actually materialize, did it? And, well, why is that? Well, there's a reason. And let's remind ourselves of why that is. That's because there was a little bit of intervention of government coming to the rescue. And we'll go to the beginning of this chart here. Several ways. They kept zombie companies alive, everyone. They changed the trading while insolvency provisions. That terrified me more than anything else. But that just shows you how if you're making predictions of a market, changes in the market, all those predictions can go out the window because the government can just change the rules. We're not in a free market here. We're in a somewhat quasi-free market with significant government intervention and regulation because people don't want a free market. Australians do not want a free market. A lot of people around the world don't want a free market. They want a reasonably stable market. They don't, sure, they may get excited when a stock goes to the moon, but they don't want it every day, and you can't run business like that every day. If your currency, like your Bitcoin, shoots up 20% and then it's down 40% the next day, you can't do a business like that. We're JobKeeper. 9% of the workforce in Victoria was on it. 9%, guys. And you've got juicing the market. You've got the cash rate at emergency levels. There's talk of the cash rate going up. It's May Day here in Queensland, so I've been following the news. Okay, no, cash rate isn't up yet. There's talk about them increasing it, still at 0.1%. 3% was the emergency. You had home builder, everyone. First home buyer grants up to 88 grand when you include all the deals that people got. That seems like nothing now. Tasmania's offering 200 grand. Labor are proposing to buy 40% of people's houses, guys. I mean, what? And I'll do a video on that. I've got a poll on my channel asking your opinion about it. Please participate. But what worries me is the long-term implication this is going to have. This is going to impact all of us. The implications of this over the long term are that people are going to start thinking that it's normal for the government to own a chunk of your house. So they'll start calling for more of it. Special interest groups will say, what we should get, there should be 60% government ownership of single-parent houses. Or bald YouTubers should have 80% government-owned houses. It's to help you, everyone. It's to help you. You've got the 5% and 2% government loan guarantees, negative gearing, just a part of our culture now, and the super withdrawals, among other things. So, we're not... Oh, and then you combine all of these supply issues. Just council, the not in my backyard crowd, making real issues with regards to building property. And then you've got mortgage holidays, keeping people in those houses that may otherwise have been forced to sell on the market to allow prices to go down to a more reasonable level. So, yeah, the game is stacked against you if you're predicting a big fall or a correction. We've seen politically they're willing to throw future generations under the bus for property. I saw on Twitter someone's predicting a 70% fall in property. Can you see that really happening here? What political interventions would occur to stop that here in Australia? Is there the political will to allow it to happen? They'll just make it harder for people to develop property, I don't know, and then open the floodgates for more migrants. How do we get a cultural shift away from it? How do we really get our addiction from property? Is it even possible? Australia is just going to, because we're in a globalist world now, Australia is just going to be the holiday house destination for the world. And all our innovation goes overseas then. So, house prices set to plunge if rates rise. So even 15%, guys. Oh no, you're back a year. Oh, a year of gains are gone. Oh no. Pressure is piling on for homeowners as interest rate rises could leave them struggling to meet repayments on a house worth less than what they paid for it. Yep, that could happen. And what do you think? They're going to instantly sell at a loss? No, if it's their primary residency, they need it as a home. If they're an investor, they're probably negative gearing it. So will it make that much difference? They may just have to sell one or two of their investments. Or they'll up the rent. So, the interest rate hike, which some analysts have predicted to come as soon as Tuesday, could trigger a 15% fall in housing prices, the Reserve Bank analysis shows. 3 of the 4 major banks have said they expect the RBA to raise the target rate to 0.25% on Tuesday. This would leave homeowners struggling to make mortgage repayments for a house worth less than the price they paid for it in the first place. So they'd be in negative equity. Let's have a look here. Where's the number of negative equities here? I mean, this is a bit old, but you can see it's been going down. It peaked back in 2019, and And even if you are in negative equity and you're still making your repayments, do you think the bank is going to knock on the door and say, oh, you've got to get out of your house, we've got to sell it? We're going to go through all of the bullshit and pain in kicking you out of the house to flog it off at loss. No, they're going to do whatever they can just to keep the can going down the road. And how many people do you think will fight to keep their houses? A lot of them. It's a status thing here in Australia. It's a status thing. There's a class difference between homeowners and those of you that don't own a home. That's how it is. It's not fair. It's completely bullshit, but it exists. Don't kid yourself if you don't think it doesn't. I'm not saying that that's a good thing. This whole situation is a mess. How are we even going to get out of it? It has to be multi-generational change. We need to wean off negative gearing over a 20-year period. Estimates using a model of the housing that takes into account historical relationships between interest rates and both demand and supply factors suggest that a 200 basis point, 2% increase in interest rates from current levels would lower real housing prices by around 15% over a 2-year period. A 2-year period. And what increase did we have in that last year? Most financial institutions forecast the cash rate will rise to something around 2%, a near 200 basis point increase from the current 0.1% rate in the next year or two. The rate increase touted for Tuesday would only be by 15 or 40 basis points. And I'm just checking over here to the RBA website, cash rate target. When are they releasing it? When is the decision coming? Today. What are we? When the 2nd of April? Hang on, effective date. Okay. Change. Statement. Am I? No, wait, we're in May. Hang on, we're in May. Okay, it hasn't. Reserve Bank monetary policy decision. Okay. Yep, later today. Okay. I'm getting tired, guys. I'm getting tired. It's already May. How did that happen? How did it already happen? How's May already here? This year's going by so fast. Anyway, at a 15% decrease in housing prices could wipe out most of the 23.7% increase that capital city property values saw in 2021. Dr. Mahdi Samo, a PRD researcher, a real estate firm cast out on the analysis and interview, with the Courier Mail. Our current property market differs greatly from 2009-10, she said. The current demand we have is more local demand due to a triage of factors, COVID restrictions, federal government home ownership grants, and they're just going to increase, and demographic changes. We are yet to receive the normal pre-pandemic levels of international demand for property, and we're yet to have the pre-pandemic local and international normal type of demand, the doctor said. What's more, we still have a significant supply issue, with less new ready-to-sell stock coming into the market due to rising construction costs. And I don't know if that's going to be addressed anytime soon. There's still a supply issues. It's still harder to get materials. It's still more expensive. You've still got the not in my backyard crowd. You've got politicians. Politicians who bitch and moan about housing affordability getting in the way of developments. You got to love this country, guys. The deep supply and demand imbalance right now may result in an even longer lag time between when the cash rate hike will translate into property prices. The RBA analysis also spells pain for homeowners on high variable rate loans, who make up about 2/3 of home occupiers. Really? I mean, think about it. Rates are so bloody low now. It's okay, it's going to go up. We may have to pay normal rates. Did anyone really think that the rates they had now would stay this way for the foreseeable future? The banks already planned for buffers. They have to before they give out the money. What it's going to do is it's going to impact the retail sector. That's who are going to feel this. It says that around 60% of these mortgages would be required to fork out much bigger repayments in the case of a 200 basis points rate rise in coming years, which could see more Aussies experiencing financial stress. Well, let's have a talk about this one, guys. So there you go. I mean, I'm becoming more and more skeptical about all of these claims of significant corrections in the market, because we've seen how willing our government is on both sides to use housing to stimulate the economy and see housing as a vote-buying issue. Let me put my tinfoil hat on. Would there be a greater incentive to ensure housing remains unaffordable so you can always come to the rescue? You chuck a bit of money at 10,000 people every election, and that'll keep you in power, or that'll help you win. Is that more useful to the political class and the establishment than it is to allowing the market to be free? Hey, I'm just putting it out there. Maybe I'm just going a bit too off tangent there, or maybe that's too 4D chess for them. But well, what do you reckon? I can't see there any serious attempts to address housing affordability. If you really want to address it, you need to, there'd be a few ways to do it. I would look at, number one, increasing supply, doing everything you can to increase supply, reducing costs, reducing headworks costs, reducing the red tape and hoops you need to jump through, reducing the number of unnecessary regulations in the National Construction Code. We've got all of these energy efficiency requirements. Ditch all of them. Really allow houses to be built much cheaper and simpler. If people want those extra bonuses, let them do it themselves. I can't see that happening. Or you know what would be even more exciting to see? What if you allow people to write off the interest costs on their primary residence and then get rid of negative gearing? What do you reckon? We'll have to see. Let me know if you think any of these things will happen. And do you think Labor's policy will help them get in? Are you worried about a 15% housing crash? Do you think it'll even make any difference? Will it even be affordable to you then? We're not going that far back in time. Anyway, thanks for watching. Let me know your thoughts and opinions on this one in the comments down below. If you want to support the channel, there are a few ways you can. You can join us on YouTube or Patreon. Use our referral links from Amazon, eBay, Independent Reserve, or AussieBroadband. Or if you need architectural services, we have a lot of experience in education, commercial, and resource sector work. Take care, guys. Have a great day. And don't let these predictions keep you up at night. And I wouldn't be waiting for a correction to jump in. You've got to do your own scenarios. Remember, negative headlines gets the clicks. That's why we keep seeing these.